Hi everyone, and welcome back to my channel. Today I will be discussing exchange traded funds, commonly known as ETFs. ETFs are a real simple way to invest in the stock market and have been the most popular investments over the last decade. So today I will be going over everything you need to know about ETFs. I will be touching on what are ETFs, what types of ETFs are there, what are the pros and cons of ETFs, and ultimately if you should invest in ETFs. So if you're new to my channel, the goal of my channel is to help you earn more money, save more money, protect your money, and grow your money. So I generally provide information for finance-related topics. So please subscribe to my channel so that I may continue providing you with good content and to keep you updated on my upcoming videos. So let's get into it. An ETF is an investment fund that pulls together different assets such as stocks, bonds, commodities, or currencies, and then divides its ownership up into shares. This means that it is possible to buy one fund that provides exposure to hundreds of investment securities. And because ETF shares are traded on all major stock exchanges, they are bought and sold like stocks. So in order to buy and sell shares in an ETF, you will need a trading brokerage like CIBC, TD, BNS, etc. So I want you to think of an ETF as a basket that holds investments together. When you invest in an ETF, you are a part owner of all the investments in which that ETF holds. By spreading the money into different securities, ETFs generally provide investors with diversification, which helps balance risk. There are many different types of ETFs one can invest in, such as the ones shown. Some ETFs invest in a variety of stocks and bonds. Some replicate the performance of a stock index like the S&P 500, and others track the performance of various sectors like the healthcare or technology sector, amongst others. However, different ETFs offer different amounts of diversification. For example, ETFs that focus on particular sectors typically offer less diversification than those designed to replicate an index. This is due to the fact that sector ETFs only include stocks that are associated with particular sectors. So if the sector is out of favor or not doing well, the ETF will not do so well either. On the other hand, index ETFs hold stocks from across numerous sectors. So when one sector is not doing so well, another sector might be doing better, which reduces volatility in the ETF because of its diversification. Wikipedia has a list of the most popular Canadian ETFs being offered in Canada. It shows the name of the ETF, what asset class it belongs to, and the MER fees, which are the management expense ratio, which is associated with the ETF, amongst other things. I would suggest that you all take a look at the type of Canadian ETFs available by Googling Canadian ETFs-Wikipedia. The most important thing you should consider when deciding to purchase an ETF is to look at the ETF's performance over the last 5 years. Ideally, the ETF should have a return no less than 40% in that time period, which is basically an average of 8% return of the stock market. You should also look at the top ETF companies such as Vanguard, BMO, BlackRock, which is the parent of iShares, etc. These companies have a track record of demonstrating high financial performance over a number of years with a proven track record and have an assortment of funds. Also look for ETFs that have low expense ratio or MER. So the annual fee that ETFs charge all their shareholders is known as the expense ratio. And this figure is expressed as a percentage. So the expense ratio includes the fund management fees, as well as other administrative fees and various fund operating costs. So remember, always do your research before making any sort of investment, especially when buying individual stocks. Unfortunately, no matter how much research you do, sometimes companies fail to execute their business plans. So the best way to invest and avoid losing your money in the stock market is to diversify. If you diversify, you are spreading out the risk over several different stocks. Even the most experienced investors have lost their money owning individual stocks. And that's why ETFs are a good alternative to owning individual stocks. So you're probably asking yourself, how can you earn a positive return or a profit from ETFs? And similar to stocks, you can earn a return from two ways, either through capital appreciation, which is selling your stock for more than what you paid for it, or through dividends. ETFs are a really great alternative to owning individual stocks because they are really easy to invest in and really easy to understand. So to summarize, the pros to owning ETFs are that you receive exposure to all the investments held in that ETF in a single trade. And it's unlikely that your ETF will spike up rapidly or go down rapidly, therefore leading to lower volatility in the share price. And because ETFs are traded on a stock exchange, investors can clearly see the price when bought and when sold. Also, ETFs are easy to buy and sell because they trade during the day like any other shares on the stock exchange. And lastly, since most ETFs seek to track performance of an index, therefore the ETFs don't need to hire expense fund managers to pick stocks because you're not paying someone to beat the market, but rather instead just to participate in the market, which helps keep management fees low. Overall, as you can see, there are many positives to investing in ETFs. However, there is a negative that I want to point out. So the negative I wanted to touch on is that ETFs are not completely fee-free. The fees are usually very small anyways, but ETFs, MERs, are included in the share price. So you'll never have to physically pay anybody or see any money coming from your account. The ETF share price is adjusted to include the MER along the way. So fees generally range from 0.02 to 0.05% on the value of the ETF held. So if the value of your ETF is, let's say, $10,000 and the MER is 0.03%, you will be paying fees of approximately $3 per year. So we've gone through a lot of information, and now I hope you now understand ETFs a little bit better. So you still might be asking yourselves, like, are ETFs actually a good investment? And to that I say absolutely they are. As a new ETF investor, the best way for you to enjoy the most successful results is to take the time and invest in yourself and your own education before investing in an actual fund. There basically is an ETF for every kind of investor out there. So whatever you are looking for, chances are there's going to be an ETF for you. I personally own a few ETFs that round out my investment portfolio. The ETFs that I own were purchased a few years ago, and I will keep adding shares on any major pullbacks. So the first ETF I purchased was the Vanguard Healthcare ETF. I really like the healthcare sector, and unfortunately there are not too many healthcare stocks in Canada to invest in. So that's why I chose to purchase this particular ETF on the New York Stock Exchange. This is one of my favorite sectors, specifically the pharma and bio industries. This particular ETF tends to not be very cyclical in nature. The long-term positives are an aging population and a growing middle class in developing countries that will require medical products in the future from many of the companies within this ETF. When you look at this ETF's top holdings, you will notice that it has names like Johnson & Johnson and Bristol Myers, amongst many others. All the top pharma names, and you're paying about 10 basis points for this ETF. On any pullbacks in this ETF share price, I will continue to add to my position. The second ETF, which I purchased around the same time period, is the BMO Nasdaq 100 hedged to Canadian dollars. This is an index ETF hedged to the Canadian dollar. This ETF has all the biggest tech names on the Nasdaq, such as Microsoft, Apple, Amazon, Facebook, Google, Tesla, etc. This ETF charges around 39 basis points expense ratio. The expense ratio is a little on the higher side, but let me tell you, it's well worth it. I love technology as well, and this ETF has done extremely well for me in the short 3 years I've owned it. Both of these ETFs will form a part of my investment portfolio for years to come as they offer low-cost investments, and due to a passive investment strategy, they require minimum monitoring on my part as well as they continue to grow. Okay, so we just went through a ton of information regarding ETFs, so I will leave you with that for now. Now I hope you have a better understanding of what ETFs are and how to use them to your advantage. And again, if you have any further questions, please don't hesitate to leave a comment or a question below. Until next time, guys. Bye.